Hey everyone, it's Lori Atwood from Fearless Finance with our COVID Finance Tips first Facebook Live event. Thank you for joining me. I just wanted to get started by saying thanks for everyone coming and thanks for all the happy birthday wishes. So excited to have my birthday in the middle of a lockdown on income tax day, right? So anyway, please announce that you're here. Send me a comment. Let me know you're here. Let me know where you're from, what state you're from. And of course, if you have any questions, please post them in the comment section. I got some questions already from different users that started a couple days ago trickling in, and I wanted to maybe start with those as we get more questions coming in live. So, the first question that I got that I've been seeing a lot of, and really I'd like to take a few minutes and go through this, is for gig workers, 1099 workers, self-employed people, the kind of the balance between, hey, Shamika, great to see you, the balance between PPP and unemployment. Hey, Jen from Cleveland, good to see you. Um, the question is should I take unemployment or should I apply for PPP? So what I'd like to do is take a few minutes and go through what each one means for like each different sort of occupation. Hey, Michael. Oh, hey, Connor. Good to see you. Okay. So PPP is through the CARES Act. I'm not going to go through a bunch of technical stuff, but it's for self-employed people who need working capital through the lockdown and what will inevitably be a recession afterwards. Okay? So this is for people who are on a 1099, they're self-employed, they may employ other people, they may not, that's okay. But at its essence, the PPP is still a loan. What does that mean, Lori? Okay. It's a loan that will need to be paid back. It's extremely good terms, right? I think it's a 1% rate, but it's still a loan. Now, there are provisions for possible forgiveness for some aspects of the loan. So I was talking to my accountant yesterday because that's what people like me do. We talk to our accountants. The issue I have, the thing that I don't like about the PPP is there's a randomness to what is forgiven and what is not. And it's in some cases being left to states. In some cases, the federal government's going to have a hand in it. In some cases, I can't even see if it's like the banks that are issuing it. In general, you're supposed to be able to be forgiven for obviously payroll because the government wants you to keep whoever your staff are employed, but also for rent and utilities and some, what I'm going to call, hi, Donna, thanks for joining. Thank you for the happy birthday wishes. For some other than utilities, some fixed costs too, but not all. And that's where the randomness starts to get me feeling very queasy. So here's what I've been telling folks who've asked me this question. If you are eligible for PPP and eligible for unemployment, I want you to think about the following things. One, can your business handle debt servicing if it happens? In other words, when we all go back to it, I don't know, June, July, whatever it's going to end up being, are you going to go right back to what you were doing? Or are you going to have to ramp up again to get going? If you have to ramp up, there's always the chance that you're not going to be able to service whatever debt you bring on. So be careful here with the PPP. This is for people who have staff, who want to keep their staff on because everyone wants to do that, right? And whose business will be sort of smooth once the lockdown's done and you can jump back into everybody being within 6 feet of each other, and they will have cash flowing again and be able to pay their people. If you don't think you're in that situation, if it's going to take you a while to ramp back up, okay, for whatever the reasons are, I don't know what business you might be in. Maybe you're in a food service business. Maybe you cut hair for a living or whatever it is. If you think you need to ramp back up, if you don't have employees, I'm recommending that people in that case consider unemployment instead. If you think you're going to have trouble managing the debt, if you think that you may have a little rocky period ramping back up, I'm recommending applying for unemployment before PPP. My understanding of both programs is that you cannot take both at the same time. Okay? You can't take them both. So if you need to choose and you're a sole proprietor with no payroll, nobody else is employed but you, and you are, you may have trouble. Hey, Kim from Colorado, you may have trouble ramping back up. Consider unemployment. Now, unemployment is taxed, it's income, but there is no payback. These are the two key things to remember about unemployment. The third key thing I would add is that it goes for, in most states, 12 weeks, could be 13 weeks. PPP, what are the key things to remember? This is a loan. Everybody remembers what a loan means. It means you've got to pay it back. Okay. The second thing is the criteria for being forgiven, to me, feels a little random still. I don't know what the rules are, and therefore it makes me a little worried. And three, if there is a ramp up period, or say, for example, in my own business, I spend a lot of money in growth and development. That is not listed as one of the things that gets paid back. And therefore, I am not applying for PPP because I don't think it'll get paid back and I don't need a loan to do it. Okay, so I hope everyone understands that. Here's the other thing to remember. When in doubt, apply. Just apply. Okay, so kind of a segue in this field. I had a question from somebody in Maryland about unemployment. Okay, she said one of the members of her family was furloughed partially on employment, so he's not working full time, but he's not been laid off fully either. And can he apply, and what happens then? So here's the answer to that. The answer is yes, you can apply if you've been partially furloughed. The difficult part of the answer to this question is that every state is different. So Maryland, where the person who had the question came from, she asked, and she resides in Maryland. Maryland requires that you work 1 full week out of the 12. Now, I don't know how they're counting those hours. Are those 40 hours? Can you spread those 40 hours over the 12 weeks? I don't know the answer to any of that. So what I'm saying is if you're partially furloughed, yes, apply. And the second thing is go to your state's site and try and read as much as you can about it, because there are going to be ins and outs and niggles about this. But do apply. The third thing to remember is that depending how much of your salary has been cut due to unemployment or partial employment, you may not qualify for unemployment if you're earning too much. So be careful there. So if that's the case, you're going to want to go back to the tried and true method that worked for my grandmother during the Depression, which is trimming your expenses to try and keep them in line with your income. I know I'm so boring. I talk about that all the time. So thank you so much in Maryland for that question. So the next question was from Lori in DC. Social Security benefits. She's worried about Social Security being cut eventually because of the massive, massive debt the United States is acquiring for these stimulus packages. This to me is a kind of a broader macroeconomics question, but I want to hit it. I think it's a great question. Social Security is its own trust. You might have learned that in economics in college, if you remember, as is unemployment they're their own things. So whether or not we acquire more and more national debt, which we are doing at a massive scale right now with these stimulus packages, and we did with the tax cut from a couple of years ago, and we will coming up here during this recession if we need additional stimulus packages. What happens here is that we amass debt, and the way the country pays its debt is by growth, and therefore growth of taxes that eventually relieves some of the debt, and we continue to pay the interest on the debt. And the debt is to our own citizens and our own corporations and people who take out U.S. Treasury bonds. All right, I'm not going to get all tangled up in the macroeconomics, but here's the thing. It's highly unlikely, without any sort of change, major change in policy, that Social Security benefits will be somehow dented or changed by the current stimulus and what seems like the never-ending debt. Okay, thank you, Lori in DC. That was an awesome question. Let me just see. I'm not up on my scrolling here. Okay, so next question was from Roberta in DC. She is heading into retirement, and her question is, do you have advice for people who are facing retirement right now and the market's going up and down and up and down and up and down? Okay. If you've been working with me, I would have told you to have 4 to 5 years of your retirement savings in cash equivalents for exactly this sort of a downturn, right? The kind of downturn where the market is down and you don't want to sell things to pay for your, daily expenses. And so you would be taking that money out of the cash equivalents part of your portfolio. And that is what I would advise anybody who is retiring now to do. Leave whatever you have in equities, and you should have equities in retirement because God willing, you're going to live 20, 25 years in retirement. I need gains, right? So take a deep breath. Don't worry. Take your current needs, your month-to-month needs from your cash equivalents, whether they're specifically in a retirement 401k or they're just in a side account that you have for investments. Either way, you want to reach into the cash and cash equivalents to fund your monthly expenses now. And try not to look at the market. This segues really well into Ali from Los Angeles had asked me a couple of days ago, and I think it's a valid question, so I want to bring it up to the group, is that should I stop? Should I stop saving into my 401k? Because look at the market, Lori, it's going crazy, it's wigging out. I don't want to just be throwing that money into this abyss, right? We're on the corner of it, we're on the edge of an abyss. Take a deep breath. Here's my advice. I've gotten this question several times, so I want to take it up here because some of you might have it. No, do not stop contributing to your 401k plan or whatever your retirement plan is, 403b, whatever it is, you're saving into an IRA, doesn't matter. No, please, 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 as a birthday present to me, continue your contributions into your IRAs and your other retirement plans. Why, Lori? Well, we're long-term investors. If you're in your 30s and 40s right now, chances are you're going to go through 4 to 5 of these sorts of market corrections before, you need long-term care, or whatever you want to call it, whatever euphemism. That means we've got a lot to go through, and the market's going to go up and down, but in general, it is going up, even with little bumps as it goes up. We need to keep contributing. We need our friend compounding to stay our friend. We need to continue with our contributions. Thank you, Ali in LA.